welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about May's Fintech and finreg news. Now, I'm starting the episode with a bit of good news for one particular whistleblower out there. The SEC across the pond granted the largest award to date to one lucky whistleblower, $279 million all in, which is record-breaking and significant. They'll never have to work again, I would believe. My goodness. But certainly it's interesting that we never actually find out what exactly the whistleblower went to the SEC about. They're very careful about not letting anything slip about the particular details of the individual or the case involved, but it certainly does set a precedent for other regulators to bear in mind. Now, I know in the UK, the FCA is looking at its whistleblower program and trying to improve matters. I doubt we'll ever see such a large figure for a whistleblower over here. You may be able to buy a pint and a packet of crisps for the amount of money you'd get from the UK comparatively. Rather than a yacht, let's say. But certainly, I think it's interesting to see the popularity of such schemes in encouraging people to blow the whistle, particularly as we focus more and more on governance as an industry, and that has an impact on shareholder prices as well. So we'll watch this space to see if it is topped anytime soon. I don't expect so, but I will be keeping an eye out on that front. In Asia Pacific, we've also seen the Monetary Authority of Singapore talking about some of its work recently around ESG, more specifically looking at its action plan regarding net zero and its aims. Finance for Net Zero is what it's called, FINZ, the acronym. They're looking at improving the comparativeness of the data underlying climate change. And much like is going on in other parts of the world, particularly in the EU and UK, around a taxonomy and making sure that it's aligned with the ISSB disclosures out there. So certainly there's a lot of focus across the globe on that topic. It's interesting to see the progress that's being made by MAS, and we'll be monitoring that carefully, see how aligned it is with regards to the EU, for example, around data definitions and disclosures. Now, obviously, across the pond, we continue, I believe I mentioned this last month, but we do continue to see some interesting developments in the mid-tier banking sector. We had SVB, we've had Signature, we've had First Republic. Now we've got Pacific West that's in the headlines with regards to funding. No doubt all of this activity is shining a spotlight on liquidity and risk management. Certainly we expect, and capital management also, we expect much more action to be taken around regulatory reviews on this topic, particularly for that segment, but beyond to large banks as well. So there will no doubt be much more communication from the regulators about what their plans are going forward. We've also got a relatively vigorous debate going on about the debt ceiling in the US. So it'll be interesting to see how that plays out. I expect that's something I'll be able to talk about next month as well. As well as making huge payouts, the SEC has, of course, been busy on its own regulatory proposals. Looking at it from a high level, we've seen proposals around repo markets in terms of disclosures that were proposed earlier this month, and we've also seen proposed amendments to Form PF that have passed through as well. So Form PF, just to remind you, is the private assets and private funds area, came in a fair while ago, and now they're making some amendments which will significantly change the outlook for some of these funds with regards to how much information they're sharing about some of their activities. So we expect that's going to be something that is going to cause a lot of debate in the industry going forward. Certainly disclosures always do. Certainly all of the other things that the SEC has been proposing around regulation best X, a new order execution rules and Reg NMS revisions haven't gone down that well. We're having continuing debate on the US, in the US on those equity market structure changes, as I probably mentioned last month. But when will they stop with the proposals? I think we're going to have many more in the canon going forward. We certainly also got to hear more from them about the changes they have to make ahead of the implementation of T+1. So they're keeping us very busy. Obviously, we had Gary Gensler in front of the House committee last month, and he got quite a grilling, as I mentioned, but it will be interesting to see how quickly he's back in front of them with regards to the other ongoing changes that are being made within the realms of the regulation. Another interesting development in the market has been the ongoing discussions about central bank digital currencies. I would say, I think the studies say that there's around about 91% of the world's central banks are looking at CBDCs. Now, that doesn't mean any progress has been made by the majority of them. It just means there's a lot of proof of concepts, a lot of projects going on in the background. An interesting development on that front is the idea of an offline CBDC. As one of the projects is looking at designing something that's preserving the privacy that's typically associated with cash payments. Now, I'm not entirely sure, so this is in the retail realm, I'm not sure how that's going to work, but certainly it's an interesting project to keep an eye on among the many that you could be looking at, including those related to interoperability, which is, of course, another big thing across the market. So one of the things to bear in mind is obviously if we are looking at things like distributed ledger technology, if we are looking at moving everything to a tokenized online decentralized manner of operating, we will need some sort of digital cash on the other side of things. So this is why CBDCs are being pushed quite heavily by the fintech side of things that are in that space. Obviously, there are some degree, and the privacy aspect, and the reason why this particular pilot's coming forward is that there are concerns from clients, such as you and me, about the access of information about all of your activities by a government or a entity such as a central bank. So certainly, I expect there to be continued debate over the coming months about the efficacy of such a system and how it would work in practice. But it's certainly interesting to see that going forward. I'll also be talking at a digital assets conference later this month about some of the challenges about KYC in the distributed ledger and digital asset space. I think there's been a lot of hesitance from many of the institutional investors about crypto. In fact, I was at a conference this week where one of the asset managers said crypto is poison. But there is still some interest in the tokenized space, and tokenization pilots are going ahead among many different types of financial institution out there. So it hasn't gone away. It may have died down a little, but certainly there's a lot of interest on that front. And now my final thoughts for the month will reflect what was discussed at the Asset Management Conference, because it was a relatively interesting set of discussions about some of the topics that are of interest to asset managers out there. Now, one of the things that it seems to be getting a lot of attention is ChatGPT and the potential of generative AI. There's a lot of hesitance on the part of asset managers to disclose to anyone that they're using AI. I think largely because it's such an immature technology at the moment, but there have been trials using that technology in certain areas. It certainly has potential to reduce a lot of production work, maybe a lot of grunt work that is possibly not value adding for many businesses. So given that it's in the press a lot, I think this is going to be something that will be under the radar in terms of actual projects for some time to come. But certainly it was a popular topic. Another very, very popular topic during the two-day conference was the idea of low-code technology. Now, I've talked on this on Fintech Firebrand a few times about low code, but asset managers seem to be very, very keen on the idea of democratization of process re-engineering and data manipulation down to all of the citizens, developers across their teams without having to have coding skills. Now, that's one of, and to avoid any IT bottlenecks. So certainly low code has and configurable technology has become much more popular over recent years. I would say it started maybe more on the bank side to begin with, but asset managers are fully embracing that technology now. So that's one certainly to watch going forward. There were a lot of obviously very interesting discussions across the board in terms of ESG as well at the conference, and how many of the alphabet soup of regulations are causing headaches in terms of data. I know there is a group of asset managers that are pushing the regulators to regulate the benchmark and ratings providers, as well as the data providers in the ESG space, largely because they have to base their products on something that isn't regulated, and they may be accused of greenwashing if the data is incorrect. So liability is a big issue in this space, as we all know. So it'll be interesting to see how far that lobbying goes, and whether it's successful in the EU and the US. I imagine will go down the same path as well.